Here is a question I want you to sit with for the next 30 seconds. What if the most powerful investment decision you ever make in your life happens not when you are 40 years old with decades of savings behind you, but right now, while you are still a student, while your budget is still limited, while everyone around you is telling you to wait? Because something is happening in the United Kingdom in 2026 that is quietly rewriting the rules of who gets to invest in property and who gets to build real long-term wealth. And the people at the center of this shift are not wealthy hedge fund managers or seasoned property developers. They are international students, young people, people who arrived in the UK to study and then looked at the property market around them and thought, wait, there is an opportunity here that nobody told me about. If you are an international student in the UK right now, or if you are planning to come, or if you are a parent whose child is studying here, or if you are simply someone with a limited budget who wants to understand how UK property investment actually works in 2026, this video is for you. Stay until the very end, because what I am going to share with you today could genuinely alter the financial trajectory of your next 10 years. Welcome to NestPath UK, the channel where we go deep on UK property strategy, cut through the noise, and give real people the real information they need to make confident decisions. If you are new here, subscribe right now, because we are consistent, we are honest, and we do not waste your time. Today's video is one of the most important we have made, and I want every second of it to count for you. Let me start by painting a picture that I think a lot of people watching this will recognize immediately. You arrive in the United Kingdom as an international student. You have worked hard to get here. Your family has sacrificed to make it possible. You are enrolled at a good university, you have your visa, you have your place, and then the first thing you have to deal with before classes even start, before you have found your rhythm, before you have made a single friend, is the accommodation question. Where are you going to live? How much is it going to cost? And who is going to look after you when things go wrong? For most international students, accommodation is the second biggest financial commitment of their UK education after tuition fees. And for most of them, it flows in one direction only: money out, rent paid, landlord profiting, student receiving nothing in return except a place to sleep. But here is what is starting to change. And this is the insight at the heart of today's video. A growing number of international students and their families are beginning to ask a different question. Instead of asking, how do I find somewhere affordable to rent, they are asking, how do I buy something affordable that other students will rent from me? And in 2026, the UK property market has specific products, specific locations, and specific structures that make that question answerable in a way that it simply was not 10 or 15 years ago. This is what we are exploring today. So let us get into it properly. First, I want to give you the landscape. The UK student accommodation market in 2026 is operating inside a set of conditions that are genuinely extraordinary when you look at them together. There are approximately 2.8 million students enrolled in UK universities right now. Of that number, international students account for a proportion that has been growing year after year, driven by the UK's reputation for academic excellence, the value of a British degree in global job markets, and crucially, the post-study work visa that the UK government introduced and has maintained, which allows graduates to remain in the UK and work for up to 2 years after completing their degree. That last point matters enormously, and I do not think it gets enough attention. The post-study work visa means that international students are no longer just temporary visitors who arrive for 3 or 4 years and disappear. Many of them are staying, building careers, building lives, and still needing accommodation, often in the same cities where they studied, cities they already know, cities where they already have networks and community. The demand cycle for student and young professional accommodation in UK university cities has been extended significantly by this policy. And longer demand cycles mean more stable, more predictable rental income for investors in that accommodation. At the same time, the supply side of this equation is under pressure. Planning permissions for new student accommodation developments in established city centres are increasingly difficult to obtain. construction costs have risen substantially over the past few years, making many planned schemes financially unviable and pushing developers to delay or cancel projects. The result is a market where demand is growing and supply is constrained. And if you understand even the most basic principles of economics, you know what that combination does to prices and rents. It pushes them upward. It keeps occupancy high. It makes existing, well-located student accommodation assets increasingly valuable. This is the environment that NestPath UK wants you to understand, because it is the environment that makes the three property types we are going to discuss today so compelling right now, in this moment in 2026. Let us talk about the first one, studio flats. I want to spend a moment on what a modern UK studio flat actually is, because the image that word conjures for many people is not accurate. When people hear studio, they often picture a compromised, cramped afterthought of a living space. What the modern, purpose-built studio flat in a UK student accommodation development actually is a self-contained, private, fully equipped living unit that gives a student everything they need in one space: a bed, a bathroom, a kitchen area, a working space, somewhere to relax, all within their own four walls, their own locked door, their own front door key. For an international student, the appeal of this is significant and should not be underestimated. Many international students come from cultures and family backgrounds where the idea of sharing a bathroom or a kitchen with strangers feels genuinely uncomfortable. They want privacy. They want cleanliness. They want control over their own space. The modern studio flat delivers all of that in a package that feels secure, manageable, and professional. And the developments that house these studios typically wrap them in an additional layer of appeal. Communal working spaces for group study, on-site gyms, social areas, high-speed broadband infrastructure, professional management, and security. For a student arriving in a new country, in a new city, knowing nobody, that environment, that sense of structured community and professional management is deeply reassuring. Now here is the investor angle, and this is where it gets genuinely exciting for someone watching this video with property investment in mind. Because the size of a studio flat, typically between 20 and 35 square meters, means its purchase price is fundamentally different from a standard residential property. In university cities outside London, we are talking about managed studio units that can be acquired at entry price points starting around $65,000 to $90,000 in certain markets. That number needs to sit in your mind alongside the average UK house price, which is currently well above $280,000. These are completely different capital requirements. But, and this is the part that surprises people who hear it for the first time, the lower purchase price does not translate into proportionally lower rental income. The rent on a well-located, well-managed studio flat in a strong student market does not reflect the square footage in the way that residential rents do. It reflects the demand. It reflects the scarcity. It reflects the value of that solution: private, managed, convenient, safe living for the specific person who needs it. And that means the rental yield, expressed as a percentage of purchase price, can be significantly higher on a studio flat than on a standard residential property in the same city. This is the mathematical reality that makes studio flats in the UK student market so interesting to investors who understand how yield works. You are buying at a lower price point. You are earning a yield percentage that is competitive with or superior to standard residential investment. The arithmetic simply works differently here than it does in the mainstream residential market. And the management burden in a professionally managed development is minimal. The development management company handles tenant finding, rent collection, maintenance, compliance with licensing requirements, all of it. The investor's role after purchase is essentially to monitor their income and make informed decisions about their asset over time. For an international student's family investing from overseas, or for a first-time investor who does not yet have the experience or the local knowledge to manage a property actively, that structure is enormously valuable. Let us move to the second property type, because this one has a different character and a different set of advantages, and it deserves its own thorough treatment. Shared apartments, the quality-forward evolution of the traditional shared student house. What I mean by this is simple. A shared apartment, or in UK property terminology, a house in multiple occupation, is a property where individual tenants each have their own private bedroom but share communal spaces like the kitchen, living room, and bathroom facilities. Each room is let separately on its own tenancy agreement to its own tenant. And the total income from all those individual room lets is substantially higher than what the same property would generate on a single unified let to one household. This is the core economic logic of the shared housing model, and it has not changed. What has changed, what has evolved significantly over the last several years, is the quality of the product at the better end of the market. The modern quality shared student apartment is not the damp Victorian terrace of student housing mythology. It is a properly refurbished, well-maintained property where each bedroom is a comfortable, genuinely livable private space, where the shared areas are clean and functional, where the management is professional and responsive, where the broadband is fast and reliable, where the landlord is reachable and the property is compliant with all the relevant regulations. For students who want the social experience of living with others, who want the communal kitchen where friendships happen, the living room where people gather in the evenings, the shared experience of navigating daily life with a small group of people their own age, quality shared accommodation delivers something that a studio flat does not. It delivers community. And for many students, particularly those who are new to the UK and who are actively trying to build friendships and social connections, that community is not a nice to have. It is genuinely important. From the investor perspective, the numbers on a well-managed shared student property in a strong university city are compelling. A 4-bedroom property that might generate $950 a month on a single residential let could generate $1,600 or more a month on individual room lets to students. That differential, that gap between single let income and room-by-room income, represents the yield advantage that has made the HMO model attractive to investors for decades. And in university cities with tight accommodation markets, that advantage is particularly pronounced right now because demand for quality shared rooms is high and the supply of genuinely good quality, properly managed shared accommodation has not grown proportionally. Cities where this model is performing well right now include Sheffield, Leeds, Nottingham, Leicester, Coventry, Liverpool, and Newcastle. These are cities with large, established, well-regarded universities, significant student populations, accessible property prices relative to income potential, and established student rental cultures. These are not speculative bets on future demand. They are cities where student accommodation has been a proven market for decades and where the fundamentals continue to support strong investment performance. Here at Nespath UK, we talk often about the importance of understanding what kind of city you are investing in, not just what kind of property. A good property in a weak location will underperform. A good property in a strong location, one where the university is large and growing, where student demand is consistent and renewable, where the city's economy and transport infrastructure support long-term desirability. That combination is where the best outcomes happen. And in 2026, the cities I just mentioned are, for the most part, sitting in that stronger category. Now let us talk about the third property type, because I want to make sure we give it the attention it deserves. Student investment rooms, individual units within purpose-built student accommodation blocks, sold to investors and managed professionally on their behalf. This model has grown significantly over the last decade, and it remains, in my view, the most accessible and most straightforward entry point into UK student property investment for people who are starting from scratch. Here is precisely how it works. A developer builds a large student accommodation block, could be 200 rooms, could be 500 rooms, in a prime location in a university city. That block is managed by a professional operator who handles everything: lettings, maintenance, cleaning of communal areas, student welfare, rent collection, compliance with housing regulations. The developer sells individual rooms or studio units within that block to investors. Each investor owns their specific unit outright. It is on the land registry. It has a title deed with their name on it. It is a genuine property asset. And they receive their share of the rental income paid by the management company on a regular basis. For the investor, this structure solves the two problems that most commonly stop new investors from entering the property market. The first problem is capital, because the entry price for individual PBSA units can be significantly lower than a full residential property. In certain markets and developments, units can be acquired at prices beginning around $55,000 to $80,000, making them accessible to buyers with $20,000 to $30,000 of investable capital who can complement that with specialist financing where available. The second problem is management complexity, because the professional management structure means the investor does not need to find tenants, chase rent, deal with maintenance calls at inconvenient hours, or navigate the increasingly complex regulatory landscape of private renting. All of that is handled. The investor simply owns the asset and receives the income. For international investors, for the family of an international student who is already spending money on UK accommodation and wants to redirect some of that spending into an asset rather than into a landlord's pocket, this model is particularly compelling. You are in a foreign country. You may not speak the language fluently. You may not understand the local property management customs and regulations. The PBSA model removes those barriers entirely. You buy the asset. Professionals manage it. You receive your income. The simplicity of that structure for the right investor profile is genuinely valuable. Now I want to be completely honest with you, because Nespath UK is a channel built on intellectual honesty, and we think you deserve the full picture rather than just the highlights. The PBSA sector has delivered both excellent results and genuine disappointments for investors, and the difference between the two almost always comes down to the same set of variables. Location is the first and most important. The performance of a PBSA unit is entirely dependent on the strength of the student demand in the city where it sits, and specifically on the health and trajectory of the university or universities that generate that demand. An investment in a PBSA development near a large, growing, internationally recognized university in a well-connected city is a fundamentally different proposition from an investment in a development in a smaller city with a university that is declining in enrollment or reputation. Before you consider any specific investment, research the university. Look at its most recent enrollment data. Look at its international student numbers and the trend over the last 5 years. Look at its league table ranking and whether that ranking has been stable, improving, or declining. These are public figures. They are accessible. And they tell you more about the long-term health of your investment than any developer's marketing brochure ever will. Management quality is the second critical variable. The management company is the entity that actually determines whether your investment performs or disappoints. They are the ones who fill the rooms, collect the rent, maintain the building, and keep the operation running smoothly. A great location with a weak management company is a worse investment than a slightly less perfect location with an excellent management company. Research the operator before you commit. Ask for references from existing investors. Look for independently verifiable reviews. If you cannot find real investors who will speak candidly about their experience with a particular operator, that is a warning sign, not a reason to proceed. And always calculate net yield rather than relying on gross yield projections. The gap between what a developer advertises as the headline yield and what you actually receive after management fees, service charges, ground rent, maintenance provisions, and void allowances can be very significant. Some schemes that advertise 8% gross yield deliver 5% or even less net. That difference matters enormously over time. Ask for a complete itemized breakdown of all costs before you invest in anything. The broader environment for UK student property in 2026 is genuinely supportive of this sector. Growing international student numbers, the extended post-study work visa, creating longer demand cycles, constrained supply of new quality stock, and improving financing conditions compared to the challenging environment of the past couple of years. All of these factors are aligned in a direction that benefits well-positioned student accommodation investors. This alignment will not last forever. Markets move, conditions change, windows open and they close. The investors who look back in 5 or 10 years with satisfaction are the ones who recognize the conditions for what they were, did their homework, made informed decisions, and acted with intention rather than waiting for a certainty that property markets never provide. At Nestpath UK, that is what we are here to help you do. Not to chase excitement, not to follow hype, but to build genuine understanding that leads to genuine confidence, and genuine confidence that leads to genuine action. So here is what I need from you right now. If this video added something real to your understanding of UK property, if it answered a question you have been carrying or opened a door you did not know existed, please hit the like button. It takes 2 seconds, and it is the single most effective way to help this channel reach more people who need this information. Subscribe to Nestpath UK if you have not already done so. We are consistent, we go deep, we respect your intelligence and your time. And drop a comment below telling me where you are right now. Are you an international student thinking about property for the first time? Are you a parent considering investing in UK accommodation for your child? Are you a first-time investor with savings and a question about where to start? I am in the comments. I read everything. Let us talk. The door to UK student property investment is open in 2026 in a way that it has not been for a long time. The question is whether you walk through it informed and intentional, or whether you let this moment pass. The choice is yours. This is Nestpath UK. I will see you in the next video.